Hi everyone, it's great to be here today, now also as CEO. I will cover the main highlights of 2022 and how we see the next 3 years unfolding. But first, our gratitude to Andy for all his good contributions to Galp over the last 2 years. Really appreciate it. 2022 was a year of very strong operating performance. We achieved most of our targets across the 4 business units. And financially, EBITDA was very strong as well, over 3.8 billion, with our asset base really well positioned to capture the macro tailwinds. Now, we did have some headwinds in our gas supply activities into Europe. Unlike our competitors, Galp does not produce much gas. So we have to source most of it from third parties, and they had their own restrictions. So while others have enjoyed record gas results during 2022, Galp actually lost money here. This will change in 2023. OCF was 2.8 billion in 2022, so we will go ahead with the 500 million buyback program. This will start now and will be executed throughout 2023. The dividend per share related to 2022 will be 52 cents per share, subject to the AGM decision in May, and for which half was already paid out. We remain very committed with ESG and responsible practices. So we're pleased to see that we continue to be ranked as a leading energy transition champion and to be recognized as such by all the key independent agencies in their sustainability rankings. Now, a word on each of our 4 business units. Upstream production during 2022 was according to guidance, 127,000 barrels per day, also supported by the startup of Coral South FLNG in Mozambique, on time and budget. We made good progress in our key developments in Brazil, even though we are having COVID-related challenges in the execution of Bacalhau, now with first oil in our plan for mid-2025. We have now taken the decision to divest from our mature upstream stakes in Angola. Now, we saw this as an opportunity to high-grade our portfolio, focusing on our lowest carbon intensity barrels. So with regards to oil, Galp Upstream has become a pure play on Brazil, at least until we have more news from São Tomé and Namibia. Excluding Angola, our production this year, 2023, and next year, 2024, is expected to be just above 110,000 barrels per day. With Bacalhau, this should go up 30% once plateau is reached in 2026. On renewables, we expanded our pipeline of new projects and we took full control of Titan Solar. Now, Titan Solar is where most of our Spanish renewable portfolio sits. The business is fully consolidated in our books. Now, just for reference, in 2022, this was a 220 million EBITDA business on a 100% basis. Installed operating capacity was up 40% during 2022 to 1.4 gigawatts. It's all in Iberia. And this, despite persistent challenges with permitting and licensing. Now, we expect to reach 1.6 gigawatts of operating capacity during 2023 and to start construction of several new projects, which will significantly boost our installed capacity during 2024. And we stick to our target of 4 gigawatts installed by 2025. We are also advancing engineering work and permitting for the lithium processing facility in Portugal through our 50/50 JV with Northvolt. On industrial, and during 2022, our asset base demonstrated very, very high reliability and flexibility. So we have navigated through the constraints of non-Russian VGO supply and elevated gas prices. For 2023, we expect refining to be supported by healthy cracks, but we have significant maintenance planned for this year, and this will temporarily reduce throughput and increase overall cash costs this year in 23 only. We expect to FID our HVO unit during H1 this year and 100 megawatts of electrolyzer capacity, which will be our first meaningful gray-to-green step to decarbonize Sines with green hydrogen. The Energy Management Organization is now contributing meaningfully across all business units where the revenues actually get booked. And within industrial and midstream, we have gas and power trading, which is also managed by Energy Management, and where we maintain a conservative view on the sourcing conditions from our long-term suppliers, at least for the next few months. But overall, European gas trading should recover from its positive contribution to Galp during 2023, and also with the support of gas inflows from the US later in 2023. Commercial remains a stable cash flow contributor. We continue to successfully transform this important business from a mostly oil volumes business towards increased non-fuel services and convenience offer, and new low-carbon contributions such as EV charging and distributed solar. You know the quality and longevity of our existing Brazilian upstream portfolio, and this will get even better once Bacalhau comes on stream. This is also a giant low carbon intensity field. So we have the basis to continue to build our low carbon businesses, which attracts much higher valuations, much higher multiples, and simultaneously remunerates our shareholders competitively. The balance sheet is strong, and most of Galp's net debt today is already mostly associated to green projects, for which funding is plentiful and very long dated. So we stick to the same strategic and capital allocation guidelines as before, with a strict focus on returns when we decide every new investment. Our low-carbon investments are selected very carefully and often planned for integration within our own established businesses, where we have very significant competitive advantages. For example, we need green electrons from renewables to produce green hydrogen and HVO, which are key elements to decarbonize our own industrial activities and those of our clients. Our financial discipline will continue, with cumulative net capex during 2023 to 25 of about 3 billion. This averages about 1 billion per year. This is aligned with what we have said before. And this despite the consolidation of our renewables business and already pricing in higher inflation and a stronger dollar. Now, this discipline is achievable given the long life nature of our upstream assets. Less capex is required to fight production decline. Selective divestments will also be considered to crystallize value, as was the case with today's Angolan announcement. To wrap it up, Under our current macro assumptions, 2023 EBITDA guidance is 3.2 billion euros, which after taxation leads to an operating cash flow of 2.2 billion. Over the next 3 years, cumulative operating cash flow should be 7 to 8 billion, with a profitable and growing low-carbon mix. This OCF will cover our net capex requirements, our dividends, buybacks, and allowing for further deleveraging. Thank you for watching. We look forward to catching up with you soon.